Small cap funds undergo substantial corrections. We will discuss a technique. When it comes to small caps, it is safer to stick with large size funds. You will see the size of these funds, such as 20,000 crores, 17,000 crores, 12,000 crores, 9,000 crores, etc. You have Nippon, SBI, HDFC, Axis Small Cap, Kotak, etc. in the top funds in terms of size. There is comfort in dealing with the large fund houses as they are old, highly experienced through multiple market cycles. They also have a superior investment process and the best fund management teams. Many investors say that their funds have not been performing well, so they withdraw the money from these funds and invest in another small cap fund. If you had invested in SBI small cap in 2021, at 49% return, you would have underperformed Nippon small cap, which had given 75% return. So you would have shifted your investments to Nippon small cap, only to find that the next year, at 7% return, it had underperformed the SBI small cap. Similarly, if you had invested in HDFC small cap, at 5% return, it had underperformed other small caps, and you would have switched out of this fund to another fund, only to find that the next year it was the top performing fund at 17% return. So never switch funds because a fund is underperforming for a year. As long as the fund you have invested in is one of the largest in terms of size, you can be fairly sure that the fund has the capability to employ the best fund managers. So you can ignore short-term corrections. You will see that all these funds, despite individual ups and downs, have given a good return over a 10-year period. All the top funds have given about 20% annualized return. There is also a myth that very large funds in small cap category cannot perform. But look at the largest fund, Nippon Small Cap, with an AUM of 28,000 crore. It has delivered the highest performance. So that myth is also being debunked here. Now let us look at the best time to invest in a small cap fund. Let's go to TradingView and check for small cap index, and let's add moving average. I'm selecting the 200-day EMA. You see the average is basically a smooth line. It removes the noise of volatility from the stock price. You see that the index itself, like a stock price, keeps moving up and down. You can see that when it goes up, it comes down below the average. And when it comes down, it also goes back above the average. So if you can spot the times when the index is quoting below the 200-day average, you see you're getting multiple such opportunities in a year, sometimes once in few years. Sometimes it remains up for a long time, and sometimes there are sharp corrections. These blue circles are the best times to double up your investment in small cap, or you can just do a top up or a lump sum. Sometimes these opportunities last for a few months, sometimes for longer periods of time. Investing at these times, when the price is lower than the average, make sure your risks are lower and you're buying them cheap. This increases your probability of higher return. The other method used is the relative strength index. Whenever the relative strength has been less than 40, it has been a good time to buy small cap funds. So rather than worrying about which is the best small cap fund, focus on buying them at the right time. Then you can ride the wave. You can sell when you meet your goals or when the index has gone way beyond the average and the historical returns look too attractive. The concept is not to halt your current investment plan, but to enhance it. If you're already investing through SIPs, you can use this technique to increase the amount or make a lump sum investment when conditions are favorable. This might increase the likelihood of higher returns. Finally, we need to be aware of fund manager changes. Every fund house will explain that they have a robust investing process whenever a fund manager quits. However, we cannot eliminate fund manager style making a difference to fund's performance. If a standard operating process is good enough, we do not need pilots in a cockpit. That day will also come, like AI in the stock selection space. If you like the content, can you please share this with your friends, as that would help the YouTube algo to reach more audience. Like and subscribe.